We're looking at a market that has advanced for several months, and now we have some questions going forward, so we'll see. This is the Money Smart Show on April 6, 2024. So he will talk about alternative lending and his take on that. Disclaimer. This talk on portfolio management and drawdown control is designed to educate investors to identify clues to the market based on stock market data. Investors should be aware that the analysis here is designed to inform, not avoid all losses that might be incurred, and past performance does not guarantee future results. And we're bullish on the market, so we're just comfortably staying in the market here. On the top screen, you see the market has come down a bit here, but we're looking at a market that is starting to weaken a little bit, just like it was over here after December. The intent of the website is to invest in proven portfolios to generate high returns, and then we sell out before a bear market hits. And then we enter the market after the bear market is over, and that is the intent. We can hit that. Whatever you get in, you get out. Charts describing indicators for market direction on my website. Bear market signals, what we call the bear markets, when to get back in after the bear market is over. Examining the portfolios. What we use is the search universe, where you look at stocks that have a 15 million to 250 million market cap, and the market cap between 2 and 10 billion. I have posted on YouTube some 2-minute YouTube videos describing the features of the book, Before the Bear Strikes, and the Moon Run Report, which is my website, and the Money Smart Show. From 1987 to the present, bear market calls and back tests and various commentary. And most of the better funds on the market have an alpha of about 3. That's my show.
So alternative lending, what is it? Typically, you'll see they'll say things like they go to their parents, a banker, a spouse, friends. There are alternative lenders. Who are they? They're institutional, non-bank lenders. They're funded by family offices, investors, and corporations. It's a growing, vibrant market. Because they are non-bank entities, they have a lot more flexibility and sometimes a lot greater risk appetites for the type of lending that they can do. So where a bank might have to say no to one of their customers, you're outside of their credit box. So what is an alternative loan advisor? An alternative loan advisor is just like a commercial or residential mortgage broker. They can work across all types of loan products, such as personal, business, commercial real estate. They work with dozens of these institutional lenders of all types, commercial real estate lenders. They work with all the business loan lenders. And once they know your product and your needs, or once they know you and your needs, they can get you to the right lender and the right product. When you want to prepare yourself to talk to an alternative lender, because an alternative lender has to get to know you. You have probably no prior relationship, unlike your bank. And so what they're going to look for, first up, is they're going to look for your FICO score. That's really critical. That varies a little bit by lender, but those are pretty accurate ranges. And you can improve your FICO score just by paying your bills on time and using less than 30% of your available credit and having a mix of credit. That will help raise your FICO score. They're going to say, ask you for your FICO score. So you can get your FICO score for free by going to Experian.com. You can pull that down for free now. They had a bankruptcy 2 years ago, and we were able to get them financing, where a bank couldn't because of that. So they're going to look at your 5 C's, and the bank does this as well. And it's what's your character, your credit history, your FICO score will show them that. They're going to look at your capacity, your debt to income ratio, the capital, and that is the amount of money that you have to support the activity that you need a loan for. So remember, when the bank says no, it's not over. There are alternative lenders who can provide that finance when the traditional sources of loans have to decline.
Do you charge more than a bank would charge because they're coming to you and they got turned down by a bank?
So as a As a commercial loan advisor, I have relationships with the lenders, these alternative lenders. And so when they price out their product, whatever that loan is, I have a relationship with them. All of those are presented by the alternative lender for the particular type of loan.
So do you actually do these lenders, do they actually charge more for a loan than a bank would, or what?
Where they can't service you when you go to an alternative lenders can oftentimes be very competitive with bank financing, sometimes a little bit better, because generally they've gone to, their traditional sources of financing, friends and family, or, their banking relationship. And for one reason or the other, their friends and family or their business colleagues or the bank just has to say no. But on the business loan side, for working capital, lines of credit, that sort of thing, those can be, under $1 million, in the 1 to 3 range.
So you deal with alternative loans and things like that.